Hey traders, Raghi here, and in this video we're going to talk about why the daily time frame should be part of your day trading process every single day. And so let's start off with why the daily. What does it tell me? The daily time frame is the most psychologically relevant time frame of all the time frames on any symbol. In other words, the end of day chart, how the market closes for that session, is going to tell anybody out there with an investment or with a trade, are they up on the trade? Are they down on the investment? What is their percentage gain, etc.? It's all predicated on the close of the session. Not that 5-minute or weekly or 30-minute or 1-hour charts aren't valuable, but the psychological relevance of the daily is far different than any other. So why should it be part of the daily process? Why should the daily be part of your daily process? Because the underlying dominant psychology is revealed there. Not on a 1-minute, not on a 2-minute, not on a 5-minute. It's on the daily. So we know that it needs to be part of your process. We know that it gives you a directional confidence in terms of what the market is considering. The way that I like to look at it is the path of least resistance. Okay, so why should I care what's going on in the daily? If I'm living and trading off a 5-minute chart or a 1-minute chart, why does it matter what the daily is doing? Well, the daily is still going to be, in many ways, the default direction. So what we're able to garner from the daily is something we call directional bias. So we should care because directional bias keeps us from being overactive, over trading, two-way traders. We pick a direction, we know it's support that we want to focus on, or that we know it's resistance that we want to focus on. It's either buys that we want to enter or it's shorts that we want to enter. But I feel that a sure path to disappointment as a day trader is to be a two-way trader. I think it makes a whole lot more sense to let the daily time frame dictate the path of least resistance and then trade in that direction on the intraday. So that's why we need to care. Now, what are the key things I'm looking for? Well, one of the easiest places to start is actually to start with the grab candles. And the grab candles, if they are dominantly green, I know that I have most likely bullish sentiment, bullish momentum, and if that continues for long enough, a bullish trend. I can use also the JT multi down here at the bottom of the chart. Double green. Many of you have probably heard me refer to that. Double green tells me the path of least resistance is up. Now, this is the NASDAQ that we're looking at right now. And the NASDAQ is telling us we've got double green and we've got a majority of green grab candles. But let's take a look at the Dow for contrast. The Dow does have some green grab candles, but that was preceded by a whole bunch of red candles. We take a look at the JT multi, it's yellow. So this is telling us the market is going more sideways, that the preceding trend was up, and yes, the likely expectation is a continuation of that overall uptrend, but right now, this market is chop. My expectation for the market to continue higher is lower in the Dow than it would be in the NASDAQ, which makes intraday expectation, intraday trading, a little bit more difficult to have a path of least resistance. Now, there are other more subtle things we can look at on the daily. What are some of the other things we can look at? Are we above or below the wave? Are we above or below the volume weighted average price? Are we above or below things like the 200 exponential moving average? There are other slight hints on the daily that will tell us, well, if we're not in a double green environment, which is a clear trend, and we're chopping, what are the other things we can look for to get an idea of where the path of least resistance may be? Again, look at the VWAPs. That could be a really good start, and look at where we are in relation to the wave. Now, ultimately, the benefits of looking at the daily, again, are going to keep you focusing on the path of least resistance. They are going to be a huge contributor to preventing you from over trading because you'll be trading with directional bias. You won't be open to long or short, long or short. So again, that's going to keep you confident and focused on a very specific setup. And those specific setups allow you to control risk better. Again, they're going to control over trading And of course, you're going to be trading with the path of least resistance. And that is why that daily really should be a huge part of your pre-market routine before you start your day trading.